Welcome, everyone, to Ipers new reporting officials training for schools, September 2020, presented by the Employer Relations Bureau. My name's Frisco Baccam. I'm a senior retirement compliance officer. I'll be hosting along with Tom Acton. So on the agenda, Tom will go over the Employer Handbook. As a new reporting official, this will be your go-to resource that will answer most of your questions. The information contained in this handbook will help you stay in compliance with Ipers laws. So before we get started here, I want to show you how to access the Employer Handbook. So down here, you'll see Employers and then Employer Handbook. So let me get rid of that drawing here one moment. Okay, so we'll just go into that and let me fan this so you can see the booklet a little bit better. But yeah, we obviously have a paper copy that you can have as well, but I personally use this PDF one that you can just log in or get from our public website. Finding things is really easy. Instead of scrolling through and you know, it can be a little intimidating to go through all this information. You can just simply on your keyboard hold down the control button and hit the F key, find, and as you can see on the upper right hand corner of your screen, a little box pops up that you can type what you're looking for. So let's say you want to find out information about independent contractors. Just type in independent. And as you can see, it's highlighted. So it'll take you straight to that word. You might have to scroll a few times because I'm sure the word independent might show up a few times in the work or in the handbook, but it should take you directly to what you're looking for. So it's really easy. But anyway, let me get back to the top of the workbook here. All right, I'm going to go ahead and hand this over to Tom.
Good morning, everybody. As Frisco said, my name is Tom Acton. I'm a senior compliance officer. We're just going to go through the Employer Handbook. Always a good wealth of information in here, but if you cannot find it in the Employer Handbook, you can always call us. We're always happy to help. We're going to start on page 7. What is Ipers? Ipers was established in 1953 to attract and retain good employees in the public employment system. Prior to 1953, our retirement system was called the Iowa Old Age and Survivors Disability Insurance, or IOASDI. This was prior to signing the Section 218 agreement in 1953. If you were covered by a retirement system before 1953, you could not be covered for Social Security. IOASDI was stopped June 30th, 1953, and Ipers was created on July 4th, 1953. The Section 218 agreement with the Social Security Administration was then signed on July 1st, 1953. In the beginning, Ipers was meant to be a supplemental retirement benefit to Social Security benefits. As the years have progressed and the Ipers plan has evolved, Social Security benefits are now more of a supplemental to Ipers retirement along with your personal savings. Ipers is the largest retirement system in Iowa. Ipers is a defined benefit plan under the Internal Revenue Code 401A. It is a lifetime monthly benefit, and benefits are meant to grow with your length of employment. Benefits are calculated by a formula which includes your age at retirement, and you must be at least 55 years old to start a benefit multiplier, which is based on years of service, with 2% given for each year of service. 30 years would equal 60%, and it maxes out at 65%. For regular occupations, the average of your highest 5 years of service, regardless of when they were earned. So that does not necessarily mean your last 5 years of service. There are 3 rules that each employee is striving to get to. The rule of 88 is the member's whole age plus whole years of service equal to 88. The rule 6220, which is age 62 with 20 or more years of service, or age 65, which is the normal retirement age. All 3 of these rules get rid of age reduction, but the only way to get 60% of the high 5 average is to have 30 years of service. For example, if a member were age 62 with 25 years of service, the member would not have any age reduction, but they would only get 50% of the high 5 average. This is when a member can buy years of service to increase the number of years in the calculation to add to the percentage multiplier a member would currently be getting. Ipers has a booklet called Purchasing Service that explains all the options of buying time at retirement. You must file your retirement application before you can get an accurate cost for buying years of service. This can be expensive, but for some people it is worth it. You can get a guesstimate cost before retirement age so that you can plan for expenses later. Again, Ipers is a lifetime monthly benefit, which means no matter how long you live into retirement, benefits are always paid to the member. Once a member starts receiving retirement benefits, most members will recover their investment, which is contributions plus interest, within the first 3 years of retirement. Ipers also has a disability provision, so if you were to become disabled and are receiving or have been approved for Social Security disability benefits, you may start benefits earlier than age 55. It also provides death benefits if the member dies before receiving a monthly benefit, and also depending on the option a retiree may choose. There may be additional money paid to a beneficiary upon the member's death. Ipers sets the contribution rates based on an annual evaluation by our actuary. The annual evaluation takes place in October and is based on many factors, including how many members have retired in the past year, investment returns, age of current membership, and who could potentially retire within the next year. The rates cannot increase or decrease by more than 1% for regular class membership. Once this determination is made, Ipers will send a bulletin in December to all employers, so you will have plenty of time for budgeting the next year's finances. We also list these rates in our quarterly newsletter, The Latest Word, and on our website on the home page toward the bottom of the first page. Page 8 lists all of our resources on where you could go to get help, which includes the Employer Handbook that Frisco spoke about, which was just updated last month. We have an IQ help guide out there, which was updated at the end of 2019. The latest words, bulletins, Ipers can be found on the Ipers website, or you could always call us on our help desk hotline, which is 877-473-7799. And we'll be happy to help you. Does anybody have any questions at this point? All right, we will go on to section 2, which begins on page 9, talking about Ipers reporting officials. Ipers requires that each entity indicate one person as the reporting official. The reporting official is the liaison between the employer, the employees, and Ipers. The reporting official is the person we contact if there is any questions, and the person we normally schedule a compliance review with. Ipers counts on you to report wages correctly, pay contributions in a timely manner, and maintain employee records such as addresses, start dates, termination dates, and when the employee receives their last check with Ipers deductions taken out. Otherwise, accurate calculations of retirement benefits cannot happen, and your retirees may get a little upset with us. We also send a member annual statement to our members every year, and if addresses are not accurate, these statements never reach the intended individual. Ipers employers have a 5-digit ID associated with each account, and this number should always be the beginning of your employer login. Your employer login also includes the first initial of your first name and up to 6 letters of your last name. If your current login does not reflect this format, or you are using the previous reporting official's login, you need to complete the employer account/reporting official demographics form found on our main website under employer forms, and send that to us so we can update your username. You also need to include on this form any other staff members that you want to have access to IQ and for reporting wages purposes. These people will be the only ones allowed to complete and sign necessary documentation for retirement, refunds, and wage adjustments. Pages 9 through 13 lists additional responsibilities of the reporting official, which include preparation of W-2 forms for all employees who are paid, and provide a copy of the form to your employees for tax purposes. This also includes township trustees and clerks. It does not matter whether they have Ipers coverage or not. Box 13, the retirement plan box, should be marked so that the IRS knows the employee is participating in a qualified retirement plan. You may report the member's portions of Ipers in box 14, but this is optional and not required. Maintaining accurate data such as social security numbers, date of birth, gender, and employment history. This ensures the member's wages get applied to the correct person and the member receives the benefit they are entitled to. Ipers runs a weekly report for anyone reported under 2 different social security numbers. We will contact you directly if we discover your employee shows up on this list. On page 11, documentation of leaves of absences, including FMLA leave and military time, should be kept. Employees can receive free credit based on these 2 leaves, so documentation is crucial for verification of time of the leave. With FMLA, the member may receive up to 1 free credit of service in a year, but any additional time will need to be purchased. Employees that leave and go into active duty must return to Ipers covered employment within 12 months from their discharge date from the service. Employees that get free military credit do not have to pay any contributions if they are going to retire from their Ipers covered employer. This is because benefits are based on their wages. If, however, the member is going to terminate and take a refund, or they want to maximize their death benefit, they can make a payment of contributions, but if they do, then the employer has to do it as well. On page 13, reporting members' deaths by using the Report a Member's Death form on the main website under Members tab. We need the member's name, social security number, date of death, and the name, address, phone number of the family member or other contact person so we can send them information regarding the member. One of the most important jobs is reporting termination dates and last check dates in a timely and efficient manner. This will help us here at Ipers provide accurate benefits to your recent retirees. There is a chart on pages 14 through 16, similar to frequently asked questions for what to do when and what to think about and do going forward. Does anybody have any questions over section 2? If someone is on FMLA and is receiving paid sick leave, do I still report to Ipers, or only if they are on unpaid leave? If they're on FMLA and they're receiving paid sick leave, they are getting credit and getting wages reported in that quarter, so you do not have to worry about reporting that to us. This would be if someone is on FMLA, maybe they've exhausted all their paid sick leave and all their vacation, and there's nothing that is giving them wages for Ipers purposes. If they happen to miss a whole quarter of that, then we can they can send in that form and we can get them 1 free credit for the year. One more question here on FMLA. Does it change with the COVID FMLA, or is it treated the same as FMLA? When it comes to the COVID FMLA, if they're getting paid for that COVID FMLA, we would cover that for Ipers. It's one of those nice curveball changes that have occurred this year, and it's been kind of a crazy year, but if they're getting paid for the COVID FMLA, they would be covered for Ipers. Okay, we will move on to section 3, which starts on page 17. Ipers membership. Ipers coverage is mandatory for all permanent employees, regardless of whether they are full-time or part-time. The determination of whether an employee is permanent is based on the intent when hired, and it is not necessarily how many hours are worked in a week, but determined by the length of service. Coverage for a permanent employee, whether full-time or part-time, should begin from day 1 if the intention is for the employee to work longer than 6 months. On page 18, they talk about temporary employment. A temporary employee is more seasonal or on-call as needed. Temporary employees for the school districts are their substitutes. If you have a person that works 5 hours a week but is working every week for the next 10 years, in our eyes here at Ipers, that person is a permanent employee and should be covered from day 1. A temporary employee is someone that may work May through September, or maybe works a few hours this week and then not again for another 2 months. Temporary employees can be covered from day 1, or you can make them qualify for coverage. But whatever you do, you must be consistent and treat everyone the same. You cannot pick and choose who is covered from day 1 and who must qualify. To qualify as temporary, an employee must receive $1,000 or more in each of 2 consecutive quarters. Once the qualification is met, the employee is covered beginning the next quarter wages when they are received. A temporary employee is covered even if the wages now received are less than $1,000, and they are covered unless there is a termination by either the employer or the employee, or if there's a break in service in which the employee performs no services for a period of 4 consecutive quarters. There is an exception to the temporary rule, and that is the high school students. Ipers does not have a minimum or a maximum age restriction, just the high school qualification that exempts them from coverage until they graduate. Once graduated, either their qualification period would start or their coverage would start based on how they were hired. Citizen coaches are a classification of temporary employees unique to the school districts. An employer may cover assistant coach for Ipers immediately. If they choose not to, then the following determination of Ipers coverage is needed. If the assistant coach is expected to fill the position each season and cannot be unseated by another district employee, then the district and the assistant coach have established a permanent relationship, and Ipers coverage should begin once that assistant coach returns to coach their second season. If there is no expectation of continued employment beyond the first season for the assistant coach, or if the assistant coach can be unseated by another district employee, then a temporary relationship exists, and the assistant coach shall only be covered if they meet the $1,000 in 2 consecutive quarters requirement we spoke about earlier. On page 22, it talks about other people that are excluded from Ipers. It talks about the high school students again, foreign exchange teachers. Volunteers are excluded. We get a lot of questions when we've had a lot of snow days for the school year. If those snow days pushes the school to go into June, like they were going to be done in May, but it pushed them into June now, we do get questions about if teachers can volunteer those days in June and still get their first benefit check at the end of June, and they are not able to do that. If they work out a deal with the school to where they get days struck off their contract and they truly are done at the end of May, then they have to have their room cleaned out and be totally done with the school district by the end of May. Then they can get their benefit in June. If they are not able to do that, then their first benefit would not be until July. Referees and officials are excluded from Ipers coverage, and so are independent contractors. On page 23, it talks about independent contractors a little bit more. Independent contractors are excluded from Ipers coverage. During a compliance review, we ask to take a look at copies of your 1099 forms from the previous year. We may occasionally question an employer's decision to designate a worker as an employee or as an independent contractor. Other times, we may receive a request from an employer or a worker to review their situation. In this case, Ipers will help determine if a person is an employee or an independent contractor for you. If you complete the worker status determination form found on our website under employer forms, along with the contract signed by both parties, and send that to us, here at Ipers, we will give you a formal determination in writing. Our form is similar to the IRS form SS8, which they use to determine independent contractor status. We use the same rules as the IRS does. They review the following main 3 aspects: behavior control, financial control, and the type of relationship between the entity and the member. The biggest factors we look at: person is operating under a business name or their own name. Do they hire and fire their own employees? Do they offer their services to others? Do they use their own tools? And do they carry their own liability insurance? A person cannot be an independent contractor if they are under substantial control by the organization, they do not promote their services, or if they are a public official. If you disagree with our determination, you may send the SS8 form to the IRS for a determination from them. We will use the IRS determination as our determination once it comes back. It could take up to 6 months for that determination to come back. So in the meantime, we would want you to cover them for Ipers. If it is determined that they are truly an independent contractor, we will be more than happy to help you do wage adjustments to take those wages back off. If a retiree of a school district is wanting to return to work for their former employer as an independent contractor, they must wait a 4-month bona fide retirement period before they can begin providing services for the district. This was a recent rule change effective July 1st of 2018. On page 24, for termination of employment, Ipers assumes a member is employed continuously unless specific action or documentation shows a bona fide termination with the employer. Ipers deems documentation of a formal termination to include a resignation letter from the employee, a letter of dismissal by the employer, advertisement for the position by the employer, a new application must be completed each year, and or 4 consecutive quarters with no services performed. If an employee is not retirement age, They can leave their money in Ipers and take it out at a later date, or they can apply for a refund. Refunds can be paid as a lump sum minus taxes, and the member is subject to a 10% penalty if under age 59 and a half when they do their taxes, or they can roll it over into another qualified plan. If they are going to another Ipers covered position, the new wages will add to the current wages based on the employee's social security number. If they are retirement age, they can apply for retirement monthly benefits. Please remember to update IQ with the termination date and last check dates as soon as possible once you've paid them Ipers covered wages for the last time. On page 25, a member who retires and wants to return to work with an Ipers employer must complete a 4-month bona fide retirement period. Ipers determines when a person is eligible for retirement benefits based on their last day of employment. For example, if a member terminates in December, their first month of entitlement is January. This is the first month they can receive a retirement benefit check, which is always payable on the last business day of the month. During the first month of entitlement and prior, they cannot enter into any agreements to return to work, either verbal or written. They cannot volunteer their services either. They basically cannot do anything. We want them to sit on the porch and they are retired for that first month. Once they have received their first benefit check, the next month they could return as a temporary employee if the employer makes their temporaries qualify for coverage, or they could start negotiating to come back into an Ipers covered position once that 4-month bona fide retirement is over. If the employer covers all employees from day one, they must not return to employment until the remainder of that 4-month bona fide retirement period has ended. If the member returns to Ipers covered employment and they are under the age of 65, there is an earnings limitation of $30,000 per calendar year. The $30,000 limit includes gross wages, cash in lieu of insurance options, monies paid to a deferred comp plan, allowances, and bonuses. This means if they were to exceed that wage limit, they can either stop the retirement benefit for the rest of the calendar year, or they can pay back 50 cents for every dollar they go over the $30,000 limit. Normally, those letters go out in February of the following year the member exceeds the limit. Ipers also sends out notifications to employers for a verification of the wages paid to the member. If a member is over age 65, there is not a limit on how much they can make. If a member turns age 70 while they are working, they can start receiving monthly benefits and not terminate their employment. The employer will continue to withhold Ipers from their pay, and when the member terminates employment, Ipers will do a recalculation of their retirement benefits. This year, the governor's proclamation affecting healthcare professionals and law enforcement regarding the shortened VFR period and their earnings limit has been extended through October 18th. On August 21st of this year, the governor's proclamation included teachers and substitute teachers among those employees that had the 4-month bona fide retirement period and the earnings limit removed. As recent as Monday, September 21st, those provisions have been extended to bus drivers, paraeducators, or other employees of a school district or area education agency as well. So that is brand new information just on Monday. Basically, any employee of a school district will no longer have to worry about that 4-month bona fide retirement period and that earnings limit while the proclamation is in order. If that proclamation stops, then the normal Ipers rules will be followed. Right, looks like we have quite a few questions here. The first one, we hired a temporary custodian due to COVID. Ipers covered. If your intent is for that temporary custodian to be employed by the school longer than 6 months, I would start covering them from day one. If you're not expecting them to be there longer than 6 months, I would treat them as a temporary. If at any point during that time they transition from being a temporary to a permanent part-time employee for you, start covering for Ipers at that point that they transition. Do sub-teachers get Ipers? It's an excellent question. It depends on the school district. Some school districts cover their subs from day one. So they are Ipers covered from day one. They don't have to worry about tracking whether they've made $1,000 in 2 consecutive quarters and when to start covering them for Ipers. Some school districts make all their subs qualify for Ipers. And once they make that $1,000 in 2 consecutive quarters, then they begin Ipers coverage the first day of the next quarter. We don't care which way you do it as long as you're consistent in how you do it. So all subs are either covered from day one or all subs have to qualify. Sometimes we get questions where like a former teacher comes back and they want to know whether they should cover them from Ipers from day one. We just ask them, how do you cover your normal subs? If they're covered from day one, then you would cover the returning teacher the same way. If they have to qualify, then you have to cover them just like anybody else, and they would have to qualify before they can earn that Ipers coverage again. Next question, due to the coronavirus pandemic, has the grace period been waived for retirees? Yes, they've waived that 4-month bona fide retirement period, so retirees could come back and begin helping you in any capacity as of Monday. Before that, from August 21st to September 20th, only teachers and substitute teachers could come back. But now it's any employee of a school district or an AEA. Next question, if their proclamation lifts and we have a retired teacher subbing, do they have to sit out the remaining 2 months they would have had left on their sit-out period? No. If they come back during that proclamation period and the proclamation is lifted, they do not have to all of a sudden sit out. They are kind of grandfathered in. They can remain working for you without any penalty. Next question, so if a detention center teacher for an education agency goes over the earnings limit while drawing their Ipers benefit, the fine is now waived. What's happening is during this proclamation period, they are not going to count any of those wages earned during the proclamation period against that $30,000 limit. Once the proclamation ends, they'll look at what they earned before the proclamation, what they earned afterward, and that's what they'll look at to determine whether they breached that $30,000 limit. Next question, if we currently cover from day one, can we switch to making them qualify? If so, would that have to be effective July 1st? Yes, I would recommend that if you're changing how your substitutes qualify, if you're going away from covering them from day one and making them qualify with $1,000 in 2 consecutive quarters, we would like that to be documented somewhere in your rules, and I would do that on the fiscal year, July 1st, so that way the new school year will have one set of rules compared to the school year that just ended, and that will only affect the new hires. So anybody that is already being covered will remain covered. The next question, the $30,000 rule, is that whether it is Ipers covered or not to count toward the $30,000? For that $30,000 rule, things that are not currently Ipers covered can still count toward that. So for instance, any allowances or bonuses which are not Ipers covered when we come out to do compliance reviews, those monies paid would go toward that $30,000 limit. That way, you can't hire somebody back and give them a $30,000 salary, and in their contract they get, maybe a $50,000 sign-on bonus or something like that. We would count that $50,000 toward that $30,000 limit. So it'll be things that are normally Ipers covered, and we will look at things that are not normally Ipers covered toward that $30,000 limit. So we'll go on to section 4, begins on page 27, talks about Ipers covered wages. Covered wages includes pay for time worked to an Ipers covered employee. For most Ipers members, covered wages include regular compensation for time worked, such as an hourly or salary amount received, overtime that is paid, and there is no limit on the amount of overtime a person can receive. The employee can convert their overtime into comp time. Comp time can be used in 2 ways. If the comp time is taken as days off, it is covered for Ipers, and there is no limit on the number of days that can be used. If it is paid in a lump sum to the employee because they are not able to take the time off, it can only be covered for up to 240 hours per year. It is at the employer's discretion whether they follow a fiscal or calendar year. For example, if a member has 500 hours of comp time and they take enough time off to equal 200 hours, but still have 300 hours of comp time on the books to be paid out, if the employer would pay out the entire amount at once, only 240 hours of that time can be Ipers covered. Longevity can be additional amounts per hour or a lump sum payment as long as it is categorized as longevity, it is covered. Vacation, sick leave, PTO time If they are used to replace a normal day in a regular work week, they are covered for Ipers. An employee must use the days in order for the days to be covered for Ipers purposes. Back pay when calculated as the exact wages an employee should have been paid, but not when paid as a lump sum with no regard to actual wages. Usually this happens when raises are not issued in a timely manner, or when timesheets are not turned in correctly. Or it can be part of a legal settlement, which we will get into more detail when we discuss conditionally covered wages. A big one for us when we come out and do the compliance reviews for school districts, cafeteria plans that have a cash option can be covered if there is a qualified Section 125 plan in place. The plan must be uniformly available to all participants of a group. Districts may have more than one employment group, but cannot have a group with only one employee in it. If you have a qualified Section 125 plan with a cash option and you have sent in a Section 125 annual certification form, then the cash option is covered for everyone within the group. Even if an employee does not take the cash option, the amount must be added to the employee's Ipers covered wages as a payment in kind, with no other deductions such as state and federal taxes or Social Security or Medicare. Please send us a copy of the Section 125 plan for verification of coverage. These plans must be certified each year. If the Section 125 annual certification form is not received, then the cash option amount cannot be covered for Ipers purposes. This rule changed and took effect on January 1st, 2017. So if you're a district that's just starting to offer a cash option benefit and you want that to be Ipers covered, please send us your Section 125 plan forms and any documentation pertaining to that, so we can look it over and make a determination and help you figure out how much should be covered for Ipers, if anything. If you do not want it covered for Ipers, simply don't send in that Section 125 annual certification form. And it needs to be done each year. So if you do it the first year, it's not going to continue for the years after, because some people do change their plans and make changes to what's being offered. So each year, if you had to certify it and nothing changed in your Section 125 plan for the next year, just send in that form. We'll put it on file that everything stayed the same, and at least that way we have a record of it. If something does change, go ahead and send it to us so we can re-verify it, take a look, make sure everything is being done correctly, and we can figure out what amount should be covered for Ipers for everyone. Also, amounts deducted at the member's discretion, such as deferred compensation, dependent care, and garnishments are included in the member's gross wages. Pages 28 and 29, we're going to go through things that are not covered for Ipers. Severance pay, which is offered to someone that has been terminated as part of the incentive to leave employment, not covered for Ipers. Retirement incentives, which can be paid as a lump sum or installments. Either way, it is not covered for Ipers purposes. All bonuses, such as a signing bonus when hired, a job performance bonus, or job retention bonus, not covered for Ipers. All allowances, such as a car allowance, phone allowance, sometimes we run into clothing allowances, would not be covered for Ipers purposes. Wage equivalents, any reimbursables while traveling, such as mileage, meals, lodging, would not be covered. Also, any health club memberships or anything else an employee would have to substantiate with a receipt would not be covered for Ipers purposes. Workers' compensation is always excluded from coverage regardless of where the money comes from. Employees should keep the check issued by the third-party insurance carrier. None of this amount is considered Ipers covered wages. If the employee can supplement the difference between their wages and the workers' compensation payment with vacation or sick leave, they may cover the smaller supplemented amount for Ipers, but nothing more than that. Some employers have the employees endorse the check they receive from the third-party insurance carrier back to the employer. If you do this, please make sure the amount of that third-party check is subtracted from their gross wages before reporting them to Ipers for that month. Only the supplemented difference can be covered for Ipers purposes. Lump sum payments of vacation and sick leave upon retirement or termination, or buyouts of vacation, sick leave, or PTO time are not covered for Ipers purposes. Some things that are conditionally covered for for Ipers. Miscellaneous duties. If an employee is being paid to do other things for the district, such as taking tickets at sporting events, working the concession stand, or driving an activity bus, those additional wages should be covered for Ipers. Officiating is still excluded from this rule. Administrative leave is covered as long as the person is still considered an employee. Paid administrative leave is still Ipers covered. Legal settlements are covered only to the extent that eligible wages are included in the settlement. Wage adjustments would be needed to return those missed wages back into the proper months that should have been reported in. For any back wages to be covered, the employee must be reinstated. If the employee does not return to work as part of the settlement, then Ipers considers this a severance agreement and the lump sum pay is not covered for Ipers. Please send us a copy of any legal settlement agreement that you have so we may help you determine what, if anything, should be Ipers covered. Disability payments are covered if paid by the assets of the employer and not covered if paid by a third-party company. There is an excellent chart on pages 35 and 36 that has Ipers covered wages and compensation at a glance. So if you do have questions on whether banked holiday pay is covered or if back pay is covered, it gives you kind of a quick little tutorial on whether it's covered or not. Once again, if you do have other questions, feel free to call us. Sometimes it's just nice to be reassured that you're doing it correctly. Let's take a look here, see if we have any questions on section 4. First question, I had an interruption here at my office and missed some of the presentation. I see you are recording the meeting. Is there any way we can get a copy of that recording so I can go back and rewatch that time I missed? Excellent question. We are recording these webinars. We're going to put them out on our website once we have completed the training. I'm not sure exactly what date they will be out there, but we are going to put them out there for you to rewatch, or if a reporting official changes, we're going to have these out there for them. So if they caught us when a training isn't going to occur then until next spring and they come aboard maybe like Christmas time, we'll have it out there so that they can rewatch it. Next question. I didn't know that this is a webinar would be 3 hours and I have to sign off at 10. Where can I find recording this webinar later? Yeah, we will have it on our website, and I believe we'll have a section in the training part that will have those webinars there. It'll probably be closer to more 2 hours instead of 3, but that's no problem. It'll be out there so you can rewatch it. Next question. Review the September 21st through October 18th dates again, please. Yes. On September 21st, which was Monday, the governor's proclamation, which at the time in August included teachers and substitute teachers. On Monday, it also includes all other employees of a school district or an area education agency like you're from, Shane. If you have people that retire, they can come back before their normal BFR period, and they're not going to violate that BFR period. Any wages they earn during that time will also not count against their $30,000 limit. So, and it'll be that way going forward unless the governor changes anything or until that proclamation runs out. So, but if you have any other questions on that, feel free to give Danny a call. She'll be happy to talk to you. All right. With no other questions here, we'll go on to section 5 on page 37, contributions and occupation codes. Iowa law mandates that employees and employers contribute to Ipers. It is these contributions and the investment earnings that fund the many different benefits paid out to Ipers members and their beneficiaries. It is your organization's responsibility to collect contributions from the members and to remit both employer and member contributions to Ipers each month. Contribution rates are set by law. Our actuary determines the contribution rate each year. These amounts cannot vary up or down by more than 1 percentage point each year. Contributions are pre-taxed for both state and federal income tax. So if during a compliance review, we will ask to review your W-2 forms. The gross wages is typically in box 3. This amount is subject to the FICA percentage and the Ipers percentage. You would then subtract out the employee's portion of Ipers contributions and any other pre-tax money coming out of the employee's check and the remaining amount would go in box 1 and 16 of the federal and state taxable amount. You may list the employee's portion of Ipers in box 14. Once again, this is optional and not a requirement. However, most people like to see their contribution amount, so it's a nice place to put it. You should always mark the retirement plan box and mark in box 13 so that the IRS knows you are participating in a qualified retirement plan. Coverage wage ceiling for 2020 is $285,000. Any annual wages that exceed this amount is not subject to Ipers. All school district employees are paid at the regular rate. The regular rates for this fiscal year are 6.29% for the employee and 9.44% for the employer. And the two occupation codes that this affects for the school districts are Occupation Code 11 and the new Occupation Code of 28. If you're curious about any other occupation codes, they are found on pages 41 and 42 of the Employer Handbook. Let's talk about the new Occupation Code 28. Originally, we sent out a bulletin letting everybody know that licensed teachers and any licensed substitute teachers should be reported under the new Occupation Code of 28, and you had till December to get that done. Earlier this month, we changed that to, we needed it to be included by October 15th when the September wage reports are done. This new Occupation Code 28 is only for K through 12 school districts and the AEAs. It's not for community colleges and the universities. Only for the licensed teachers and licensed substitute teachers moving forward. All new hires that meet the above requirements will be coded under the Occupation 28. Administrators and remaining staff will continue as Occupation Code 11. The new Occupation Code is needed by the October 15th due date for September wage reports. Currently, there are over 60 school districts that have not used the new Occupation Code as of yet. But that number is getting lower every day as second payroll periods are coming to an end and September wages are being reported. A new employment record needs to be added either manually in the View Update Member Information section of IQ or through importing the wage report into IQ with the new Occupation Code included. Please make sure the start date that they had under the Occupation 11 also used for the new Occupation Code 28 record. A new start date is not needed. Okay, first question, do the wage annual limits change every year, and where would we find this? When we send out the bulletin in December that lets you know what the new the new contribution rates are for the year, we normally include on that bulletin what the annual limit is. It normally does change from year to year. It seems to be going up in increments of $5,000 lately, so that's what I anticipate. But to know for sure, it will be out on the front page of the website. It will let you know what the annual limit is, and you can always call us and we can let you know what that is as well. Next question, are sub-teachers coded as Occupation 28? If they are a licensed substitute teacher, we would code them as a 28. I believe the rules have changed lately, and if you have a 4-year degree, you can also be a substitute teacher. We would not count those individuals toward this Occupation 28. We just want the ones that are licensed. Next question, what about administrators and school business officials that have a license through the BOEE? Are they 28 or 11? They would be Occupation Code 11. If they are not teaching, they're not licensed teachers, and they have moved up into the administration side, they are only going to be 11s. They're not going to be the 28s. We're only looking for who's doing teaching right now. Next question, when did the proclamation that waived the bona fide retirement period for teachers start again? For teachers, that one started on August 21st, and it will continue moving forward until the governor's proclamation comes to an end. If anybody else that is working for the school other than teachers and substitutes, that one began on September 21st. Next question, we have some paraprofessionals that are licensed sub-teachers. If they sub for a teacher, which is not often, do those wages need to be coded to 28 and their regular wages to 11? If you have a paraeducator or paraprofessional that is a licensed sub-teacher, what we would look for you to do is all their wages would be under that Occupation 28. You don't need to separate it between the 28 and the 11. They're both held at the same rate, so it's not going to be any different as far as you're reporting it to Ipers. But if they are a licensed sub and they do perform those duties, we would want them under an occupation code 28. The last question, do sub teachers need to be coded as 28s? If they're a licensed substitute teacher, we would code them under a 28. If they're just certified, or if they're a sub teacher using, the fact that they have a 4-year degree, then they would still be an 11. So we're looking for only the licensed teachers and substitute teachers, and that's what they kind of emphasized on that new code, is the word licensed. Okay, so I'll move on to Section 6, beginning on page 43. We'll talk about reporting wages. Ipers wants you to submit wages to us based on when the wages are paid to the employee and not when they are earned, which is based on when the employee physically has that check in their hand. For example, if an employee works March 15th to 30th, but the wages are paid on April 5th, these wages should be reported in the April wage report that is due to Ipers by May 15th. The wages reported to Ipers should be the gross wages before taxes are withheld, and not the net wages or just the contribution amounts. Wage reports and payments are due to Ipers by the 15th of the month for the previous month's liability. If payments and wage reports are not reported to Ipers by the 15th of the month following the previous month's liability, then late fees and interest are charged to the employer's account. The interest is a minimum of $20 for late contributions of $1 or more, and $20 plus 25 cents for each person on the previous month's report for a late reporting fee. Sometimes employers have rounding issues based on the types of software the employer uses, compared to how Ipers determines what amount is due. Please watch your accounts for outstanding debits and credits so as not to receive any late charges. And just a reminder, if you are mailing in paper checks, be sure to include the remittance coupon with your check so it does not accidentally get applied to the wrong employer account. Page 44, it talks about some other forms that can be used. If for some uncontrolled circumstance you cannot report your wages in a timely manner, or you have been charged fees for late reports and contributions, there are 2 forms that can be useful. The request for waiver of late fees / interest charges, and the request for extension. The request for extension must be filed and approved before the due date of your report and or contributions. The accounting department will be the one that approves and writes off fees or extend due dates. Whether they grant that request or not, they will send you a letter letting you know whether it's granted or whether they declined it. But it's always a good idea to send that in. The worst they can say is no, but they will work with employers that aren't frequently sending in those waivers of late fees or interest charges. Termination dates and last check dates can be added to the system when submitting your wages to us through your wage report. It is always best to wait to report the dates when the person is getting their last check. You can also submit the dates through the View Update Member Information area. Once you have the dates in there, the member may take a refund with no additional paperwork needed by the employer. If the member returns to work, you must create a new employment record with a brand new start date. If you get errors that say employment records cannot overlap, or you need a first date of employment, either the previous employment did not get a termination date or a last check date applied to it, or the new record is pulling the old start date. If you have completed the employer verification or termination form for a retiree, keep a copy just in case anything should happen to change and you need to update the form. For school districts, I know you have a set idea of when school should end, so when your employees are turning in that paperwork a couple months early to us, if all of a sudden there's snow days or any changes to that, or they change their mind, at least that way you have a copy of that verification of the termination form. We will ask you to amend it and send in that amended copy so we can attach it to the application that was previously sent. So that way we have the new dates for the person. If this year has taught us anything, it's that there are many things that are out of our control. So keeping that form is an excellent idea. Ipers online reporting requirements for those employers who would rather import wages through IQ may be found on pages 46 through 48. If you wish to switch from manual reporting to importing the wages, please give us a call so we can have one of our project management employees contact you, and they will help you test the import. On page 50, wage adjustments. Sometimes wage reporting errors happen and wage adjustments need to be completed. Usually it is to fix misreported wages, wrong social security numbers, and wrong occupation codes. Anytime an employer is completing a wage adjustment to add wages to a member's account, it creates a debit on the employer account, and Ipers will send the member a notification of contributions due letter. The employer should withhold these additional contributions from the member's check as additional pre-tax dollars. If, however, the member pays by check, they will need to keep the letter and canceled check for their records. These monies will show as taxable dollars at retirement, so to avoid being taxed on it twice. The member will need to have this documentation for their tax preparer. If the member does not owe any money, we can pull the letter, the notification of contributions due letter if requested by the employer. So if it was taken out of their check correctly, but just reported to Ipers incorrectly, there's nothing more that's due. Even though they'll get that letter, we can pull it ahead of time, or you can just let them know to ignore that letter because everything has been taken care of. If the wage adjustment is for multiple months or years, the employer may work with the member to collect these contributions over a period of time so it does not cause any hardship for the employee. But the employer must pay all contributions, both the employer and employee contributions, plus any interest to Ipers by the 15th of the following month the wage adjustment was completed, or additional interest charges will be added. If it is a wage adjustment that is removing wages from an employee, this will show as a credit on the employer's account. The employer should then refund the contributions to the member, and the employer can request a check from Ipers for the credit or use the credit towards their next month's remittance. Remember to tax the refund for state and federal income tax because it was originally withheld pre-tax. You also will need to adjust the current W-2 or issue a W-2, but no past W-2s will need to be fixed. If it is a less than 6-month employee hired as a permanent employee and then terminated at least 6 days prior to the 6-month anniversary, termination dates must be listed on employee record before we will process the wage adjustment. So when you send us those wage adjustments, we'll look to see if the person or if the employee has a termination date or last check date or not. If we do not see one out there, we'll contact you to get those dates so they can be put in the system and we can continue on with that wage adjustment. These types of wage adjustments cannot be done if the employee started as a temporary, earned that right to be qualified for Ipers, and then quit less than 6 months into coverage. We can only do the less than 6-month wage adjustments for someone that was employed and covered by Ipers on day one. If it is a wrong social security number or occupation code, the wage adjustment should have one line to remove the wages from the bad number and one to put on the good number, and the wages will zero out. Do not do separate wage adjustment forms for these types of fixes. If we process that wage adjustment at 2 different times, it could result in a debit or a credit and the additional interest owed. So we'd like those type of adjustments to be on the same form so that those wages will zero out and there's nothing that's due when we go to release that wage adjustment. Okay, in the Documents tab in the IQ system, we put a lot of things out there for you each month, and we'll go through a few of those. The monthly statement. Every first of the month, you will receive an email letting you know that your documents are available to be viewed. What that means is that under the Documents tab in IQ, there is a monthly statement available that shows all the transactions that took place the previous month. It has the beginning balance, any transaction lines, which include the wage report and contribution payments. It'll show wage adjustments that have been submitted and any late fee or interest that has been applied, and then the ending balance for the month. If this ending balance is a debit, it will need to be paid by the 15th of the same month, or additional charges will be applied. If you've done a wage adjustment in the previous month, they will put out a wage adjustment detail report in that Documents tab. It will list all employees that were adjusted, and it'll show each month an adjustment was done. And it'll show the corresponding contributions for both the employer, the employee, and it'll let you know if there's any interest that is due. An annual statement, we put those out in the Documents tab in August of each year. A lot of you call in and request that. It's out there. It's just under, it'll just say annual statement, and you can use it to give that to your auditors because they like to see that because it shows everything that took place in the previous fiscal year. And it'll also list those GASB numbers for you. This year's annual statement was added on August 10th. If you need your annual statement prior to us being able to put that out for you, we can run an unofficial one for you and get that to you for your audit purposes. But you will have to wait. That official annual statement is when we put it in that Documents tab. The remittance coupon, we put that out there every month for you. It is to ensure that you have access to it, and if you pay by paper check, for some reason, if the system's down and you can't do it electronically and you have to send a paper check, you have that remittance coupon which has your unique code on there so that we get the payment to the proper area. Another report available for your records is the Wages and Contributions report that lists all employees with their wages and both the employer and employee contribution amounts. This is accessible in the account summary, wage report, and payment history area of IQ. Frisco will show us how to find this report later in training, but I'll walk you through those steps right now. What you need to do is click on the wage report and highlight it for the month that you want that report for. You then click on the tools above the very first column to the left. You will get a drop down with 4 or 5 options. Hover over the reports, which is toward the bottom of those options, and then just to the right, you will select the wage and contribution report. You may then print or save that report to your files, and it's a good way. For some reason, the wages do not match up or the contribution amounts are different between what your system is saying you owe and what we say you owe. It's a good place to find where something might be wrong. When making an EFT payment, be sure to click on the Confirm and Print button to print a copy of your transaction. If you click on the Confirm button, it will not print you a nice copy of the receipt for your payment. If you forget, you can still obtain a copy of the same information by clicking in the EFT payment history and then clicking on the EFT payment history button. But you would have to find your listed payment and use your print page function to create a copy of the payment information. It is not as clean looking as the confirmation print, but at least you do have that for your records. We do get a lot of questions about people getting errors when they click on that Confirm and Print button. Sometimes those errors will occur because of what browser you're using to open up the IQ system. If you use the Chrome browser, the Google Chrome browser, you should not have any issues with that Confirm and Print button. Most of the time where we run into problems is if they're using like a Windows Explorer or Mozilla Fox, if we're using a different kind of browser to get in there. But I was told if you use that Google Chrome browser, that should eliminate any issues. If you find that that is not true, please give us a call. We can try to track down what's going on and why you're not able to print off a copy for yourself. All right, we'll pause really quick to take any questions now over section 7 or any previous sections. We have a question: would substitute authorization be different than substitute license for the code 28? Yes, they need to have that substitute license to be under the occupation code 28. If it's just an authorization, we would just leave them as that occupation 11. So I hope that helps answer the question for you. All right, everybody's favorite. We'll start with section 8 here on page 57, the Ipers compliance review. Ipers conducts compliance reviews with each employer approximately every 3 years. We currently have 5 senior retirement compliance officers that perform the reviews, and this is our way to touch base and to make sure everyone is being covered for Ipers correctly. We also check to make sure the compensation amounts are being covered correctly and that you are not having any problems reporting wages or performing any other functions within the IQ system. We normally send out a compliance review notification letter requesting the gross wages for each employee for each quarter of the year we are reviewing. Please remember to include the gross wages for each employee. even if they are not covered for Ipers. This report, preferably in an Excel spreadsheet, should include the Social Security number, the last name, the first name, and each quarter of wages during the requested calendar year. These can be sent securely as an attachment if you reply to an email we have previously sent you, or you can send it through the new message center in IQ. It makes it nice and easy to get us that information, and you don't have to worry about it traveling through the World Wide Web. Once we receive this information and do an audit reconciliation report that compares the gross wages given to us to those reported through IQ, we will send you an Excel spreadsheet with any variances we found during the comparison. We will want an explanation for all variances found. So anybody listed on that report, just give us a reason as to why they're on the report, whether they are a high school student, they're a substitute teacher, they had early retirement incentive pay, anything like that. We just want to know what the reason is. We will also contact you to set up a time and a date that works best to meet with you. Of course, with how crazy things were this year, we have been conducting our reviews via the telephone. That is how we plan to continue to conduct those compliance reviews until further notice. We greatly appreciate your patience and understanding until we are once again able to meet with you face-to-face. While performing the compliance review, we will discuss all the variances as previously mentioned. We'll discuss your different personnel groups and also go over all the Iowa code and administrative rules that affect the school district. The current rules are contained within a compliance review workbook that we will send you as well. We also look at your W-2 forms, 1099 forms, special occupation employees, retirees, and any documentation that may be related to payroll and compensation, such as health insurance with cash options and other lump sum payments. Once the review is completed, we will send you a results letter with the findings listed. And if we require something from you, we'll let you know when we need that back to us. Normally it's within 30 to 60 days so that we can complete the review and close it out for that current year. The next section of the Employer Handbook goes pretty quick. It's the Ipers forms. All the Ipers forms are found on the Ipers main website under the corresponding members, retirees, or employers section. Under our employers section, you will find the Employer Handbook along with the most current IQ help guide. All of our brochures are listed under the About Ipers and Publications area. There is a lot of good information on our website, and all the employees should be encouraged to log into the My Account side of IQ to update the beneficiary information, change addresses, and create their own estimates for retirement. On page 59, it does describe those forms and what they're used for. So if you do have any questions, it kind of outlines it there, or you can always call us. We're always happy to help. And we thank you very much for joining us today and for our first ever Zoom webinar training for school districts only.